And welcome back to your weekly market update. Now, this week is shaping up to be an exciting one, from the latest job data in the US and Canada to stock market movements and tech earnings. We'll break down everything you need to know to stay ahead of the curve in the markets. So let's get started. First up, the Bank of England's interest rate decision is coming on Thursday at 2 p.m. GMT +2. Now, analysts expect a 0.25%, 25 basis point rate cut to 4.5%. But the big question is, how will the central bank balance inflation risks with slowing economic growth? Now, inflation hit 2.5% in December, and some experts warn that it could peak above 3% later this year. And obviously the target is still that magic 2%. So do pay close attention to the Bank of England's monetary policy report and the MPC vote split. These should give markets clues about the bank's next moves. Okay, over to the US now. Non-farm payrolls and unemployment rate data on Friday at 3:30 p.m. GMT +2. All eyes will be on this US job data. The Fed's next meeting isn't until March, but non-farm payrolls, NFP, and unemployment rate reports could heavily influence market expectations. Last Wednesday, the Fed kept rates steady. That was despite pressure from President Donald Trump to start cutting. This sets the stage for heightened volatility as markets react to economic data leading up to the Fed's next decision. Now, in December, the US added 256,000 jobs, the highest in 9 months, beating expectations and causing significant volatility. Will January's data follow suit? But we'll find out on Friday. But don't forget your risk management techniques, particularly if it does lead to increased volatility. Okay, now we turn our attention to Canada. And last week, the Bank of Canada cut interest rates by 25 basis points, as expected. But Governor Tiff Macklem also hinted at further cuts ahead. Now, in the meantime, the central bank ended quantitative tightening and announced a return to asset purchases in March to support liquidity in the markets and help gain extra traction for economic activity. Now, this Friday at 3:30 p.m. GMT +2, January's unemployment rate data will be released. Now, analysts expect it to stay within recent ranges, which you can see on the chart, supporting the Bank of Canada's rate cut plans. But as always, surprises could spark some major market movements. Last month, a drop in unemployment from 6.8% to 6.7%, which was below analyst forecasts, caused some quite heavy volatility in CAD markets. So again, keep your eye on the reaction this time and don't forget those risk management techniques. So finally, we take a look at some corporate earnings. Two tech giants, Alphabet and Amazon, are set to release their reports this week, and these could be big market movers. So again, risk management techniques need to come into play. On Tuesday, Alphabet reports after market close. Now, analysts expect earnings per share of $2.12. That's an increase of 29.3% year on year, with revenue projected to come in at $81.38 billion, up 12.5% from last year. Then on Thursday, Amazon releases its results after the market close. The forecast? Well, we've got earnings per share there of $1.52. That's up 50% year on year, and expected earnings of $187.18 billion, an increase of 10.13%. So they're going to be quite key corporate releases this week. So do keep your ears and eyes open. And that's a wrap for this week's market update. Be sure to stay tuned with our market pulse section on our website, giving you all the latest information on the markets. Thanks for watching, and good luck with your trading next week. Bye for now.